Dan, what is your economic outlook in the ag industry?
I wish I could tell you it was better today, Chad. It's not the best. We've seen grain prices and profitabilities at high levels for the last 24 months. Then we started sliding late last year. Brazil is producing record large crops. The Russians and Mr. Putin are selling wheat cheaply, and grain prices have come down to 3-year lows. I'm hoping that we made an important low at the end of February, and we'll see the markets kind of crawl out of here. But a lot of farmers are sitting on unsold cash grain. We've got a lot of anxiety in the country right now about what's happening with the new crop to come because prices are below the cost of production. You know, one of the problems that the farm economy is struggling with today is high interest rates. I mean, if you're looking at an operating loan today, it's somewhere between 7.5 and probably 9%, and it's tough. This is a different world than we've been in the last 16 years, Chad, and so farmers are adapting back to this. But you know what scares me the most is the U.S. government is now borrowing $1 trillion every 100 days, and so that competition for money is going to keep rates relatively high going forward. So farmers need to plan on higher rates being around for longer. And with that, we do need to see some relaxation in the cost side of things for farmers. I calculate the cost of producing a bushel of corn in Illinois at $4.94 a bushel. So with December corn futures at around $4.60, every bushel that's looking at being planted or every seed that's being planted this spring could be a loser. Now, again, I'm hopeful that the markets will come forward, but when farmers reached out and bought revenue insurance in the last couple of weeks, they're only insuring 80% of this year's crop. 20% is not insured. This hasn't happened for the last 4 years. So farmers are experiencing additional risk and additional financial strain because of where the markets are today.
We talk about how this affects the farmer. What about the suppliers? How do you think this will affect the suppliers, the fertilizer suppliers, chemical suppliers, machinery? We can talk about the suppliers, land costs. Are land costs, is that something that's going to change quickly, or is that going to take years for cash rents to drop? The sale of land, is that gonna flatten out? Is it gonna drop? Are we just gonna keep maintaining? Dan, what are your thoughts?
Well, the good thing, Chad, is that the land market, the farmland market, is held stable. In fact, we set record highs last year, whether it's be in Illinois or on a national basis. And so farmland values keep going up because of farmers' balance sheet that is still in relatively good position. But I do worry going forward that if the markets don't rebound, that land prices will stabilize. Unlike the mid-1980s, farmland values today are unlikely to have a sharp drop. I think if anybody's looking for a sharp drop, that's not going to happen because there's no leverage in the land market. Mm-hmm. But going forward, I do think about the need for things like fertilizer, seed, maybe even land rents to come back down just to give farmers a little more margin. But a lot of this will depend on the markets and production of grain around the world. And also, let's be honest, it also is going to depend a lot on this election coming up in November, because we've got presidents that have different views on agriculture and where this should all go.
Sure. What do you think it's going to take for a rebound in the markets, a quick rebound? Where's our demand going, number one? And obviously a severe weather event would do something. We as farmers just hope it isn't us.
Yeah.
What do you think really turns it around quick, where maybe October looks a lot better than it does right now?
So the good news about this cycle that every farmer needs to understand is the world is not awash in grain. The grain awash is corn stocks here in the U.S. at 2 billion bushels. The other side is competition. Brazil has become the world's largest corn exporter and producer, and Brazil has become the world's largest soybean exporter and producer. But Brazilian crop weather is more variable than U.S. weather. And so there's going to be bumps along the road. And so what gets me excited is that global demand for grain is still record strong. That's not changed. Where we're seeing some diversification is from our friends in China, who are going to Brazil to buy more of their grain because of the political landscape that now rests between the United States and China. I do worry. If you were to ask me, what is the big thing that keeps you up at night, Chad? To me, it's the Chinese, and that the U.S. government is pointing their finger every day at our biggest customer for U.S. ag.
Now, of course, I deal with farmers every day like you, Dan, and the common sense approach, which most farmers have. I mean, they're not usually coming in asking stupid questions. But they said, well, what's the difference if China buys their grain from South America? That means somebody else isn't buying the grain from South America, and so they'll need to come to the United States and buy their grain. Again, there's only so much grain to go around. How does all that work, really?
So as a trader, as an economist, when you bring up the C word, which is China, the impact in the market is significantly bigger than having someone else because we know the vast importance of the Chinese government and the people we're feeding. And so it can be China. If I use another C word, let's call it Colombia. Colombia imports U.S. corn, but nobody hears about them. So that they go away. But I am really encouraged about one country to our south. Where manufacturing is picked up, Mexico looks to be a real demand driver for U.S. commodities and ag goods going forward. So we're really excited about Mexico maybe taking 900 million bushels of corn in the next year or so. Mexico has become a big driver. They've had some weather problems, but we really like the economic outlook as Mexico has. People have tried to move manufacturing away from China. Their key country has been to our south.
Okay. So, I mean, really, in the grand scheme of things, it's not all bleak. It's not all dark.
Oh, no,
I mean,
no,
when
no.
we look at South America, yeah, are they the king right now for production? Sounds like they are. They're not getting any smaller. They're still taking out the rainforest. That's going to continue probably till it's gone someday. But their land quality isn't what it is in the heartland. That's where we still remain king. Is that correct?
We are still dominant. And our work would say that somewhere between 2060 and 2065, the world ends up running out of arable farmland. It's gone. And so at that point, yield becomes king. And so it may seem like a long time. 2060 seems like forever when you're sitting at 2024. But in the world of feeding people, it's not that far away. And that's why these kind of ventures in terms of drones and technology will be such an important factor to the humankind and what's to come when we think about 40 years from now.
Sure.
It all becomes yield then. I can't bring any more acres into production. If yield comes down, boy, does that have a big impact on our disposable income and our food budgets.
Yeah. Yeah. Well, Dan, I appreciate your insight on all this.
Oh, you're welcome, Chad. It's been great to be here, and I'm so excited about the drones and what you're all trying to accomplish. This is that technology that will help build yield and opportunities for the future.
Well, thank you.